Hey traders, welcome. It's Jamie Saettele here. It's March 2nd, 2016. I had to restart the webinar, so I'm gonna wait for a couple people to get in the room before I really get started, and then we'll continue on. I had to restart the webinar because they were doing some work out here on, I guess, the cable, and the guy just had to disconnect where I am right now before he could get me back online, doing whatever he had to do. So just hold on for a sec and we'll get started in just a minute. All right, so we've got some folks here in the room now. I'm going to get started. Again, Jamie Saettele here. It's March 2nd, 2016, and the Midweek Strategy webinar. I had to restart the webinar and get a new link. So let's get started. All right. So what about the disaster that is Aussie dollar? Right now we've got, I want to show you some of the charts that we looked at last week, of course, and one being FXI, which is the China ETF. Remember we talked about a potential, excuse me, potential bottoming pattern in Aussie, or sorry, in China, and we have that now. So we've actually completed with yesterday's close on the bottoming pattern, and this target from this pattern does give you about 34.36. So, you know, just quick math on that, not quite $2 higher, something like what, 6% on the upside, a little more than that from here. So there's plenty of upside on China. You'd look at support now probably on this median line if you did get a pullback of some sort. Copper has broken out of its head and shoulders pattern as well. We had a breakout that was false on an intraday basis last week on the 26th. That was actually on Friday. And that was, you know, along with whatever the hell happened in Aussie and Kiwi last week on Friday. Particularly Aussie, it just got obliterated. The end of February, although the real end of February was Monday. But again, the computers might not know that it's a leap year. I'm being totally honest when I say that. And that we may have had the month-end flows, so to speak, occur on last Friday. So we have a head and shoulders here. Again, the target here is 234.35. If you scroll back, that's a median line that goes back, you know, several years, and you know, that level was resistance more or less back at the top last September. You do have up there as well the 200-day average, I believe. I don't have it on this chart, but 200-day average is probably around there if my memory is correct. And so we've got breakouts in Aussie, we've got breakouts in China and copper, and we now have, of course, the breakout in Aussie as well. So let's look at Aussie. Focus there for a bit. You know, if we scroll back, okay, the big level for resistance, and again, we have ended up bottoming on the you know, the sliding parallel long term. What's fantastic and amazing and frustrating all at the same time is that you can end up having all the right stuff and have the right idea, and it still doesn't matter. As an example, what we were long from here, right? Last at 70, or sorry, no, it was right here. So on the 12th, we were long here on this day. It's a Friday. Bought at 70.70. Ended up, thinking we were in a good spot to take it higher, Aussie that is, only to get stopped out on this, which was the next Friday. And then after we had this on last Friday, I was like, well, we're probably going to stay in this range because we just had a giant reversal from up near resistance, 200-day average and yearly open. Instead, the market's turned right around and headed to new highs. So it's really been, quite a choppy market. But if there's any good news there, it's usually that choppy markets are resolved with bigger directional moves, and that's what you have to look for at this point. Okay, so at this point, we have moved through now I'll get rid of all the crap on here to show the clean picture. What we've done here is we have actually moved through for the first time, really. Again, you've got the trend line. Oh, this is the chart that has, is it? Hold on. Okay. I guess that's not the one that has it either. To draw them in myself. Hold on for a sec. It's probably this one. Yeah, no. All right. Yes, it is. Okay, so again, what we've got here are the long-term parallels that it's going really slow right now. I'm not sure what the deal is. Sorry for this. I'm not sure what the problem is, but everything is running extremely slow on this charting package at the moment. For whatever reason, the market, the data is not populating. I don't know why. All right. Let's bring in a different charting package and see if that works. Okay, so you can probably see it on here. The slope that I'm talking about that we've broken through now on a daily basis. Of course, I guess you could say the day is not quite over. There's like 4 hours left, but for all intents and purposes, the big part of the day is over. London's closed, and you have penetrated now resistance. Former support became resistance, and we tried to penetrate it several times and have and failed. So, I'm not sure if we can get another failed breakout on this Aussie after some of the moves that we've had. For me, you've got to treat 71 now as the level for invalidation, I guess. And looking to as far as positioning on the upside at this point for Aussie. wouldn't even think about this too much. Let's see here. You see this confluence up here? This is like the short-term uptrend resistance right now. I'm looking at a 4-hour chart, okay? But there's going to be resistance up at this upper parallel, okay? And then finally, the sliding parallel that extends off the high that you had back in December, the 31st, actually. And it does cross through some other highs as well. And that level, as you can see, intersects, looks like it's next week at some point. And it's up near about 74.40. Okay, so let's keep that in mind as far as 74.40. And what I want to do, I'm going to write that down, 74.40. And that would be kind of a target area, okay, 74.40. And what we're going to do then is we're going to look at longer term chart. Okay, this is a 4-hour chart, intraday chart. And we're going to look at a longer term, a daily, even a weekly would do here. And we're going to take a look at where the longer term, resistance potentially would come in. Okay, and that would be on this chart, right? Which daily or weekly doesn't really matter at this point. And guess what? You see that? Make it a little darker so you can see what I'm talking about. These are sliding parallels. Actually, the 50 lines. Remember, the 50 line is the line that goes in between the median line and the upper and lower parallels. Okay, and then in this case, the 50 line, as you can see, is actually really solid support back here. Okay, and that was in November of 2014, really before things kind of fell apart. Okay, and then that same line was like literally to the tick resistance last year in May of 2015. All right, so we're looking towards that line now, and that line again is up at what we have. That intersection was on the 8th or something like that. So if that's where we get there, it'd be about 74.55. Okay, whatever. Point being, that looks like an awfully good kind of attraction level, if you will. Okay, for Aussie dollar. Okay, to get into that, 70, call it 74, 40, 74, 50 region. Okay, so what about support though? Okay, that's obviously, we want to know where support is going to be, where we should potentially look to buy Aussie at this point. And I also think, by the way, that the recent price action, particularly in Aussie, I actually think is a pretty good time to potentially, to kind of learn about, or if you will, bring up this point. And that is that, this is why I guess I trade the way that I trade, as far as putting on small positions to start. And then as it gets going, get the ability to try to, kind of increase your exposure or get a little more aggressive. Okay. Because when you're getting chopped the hell up, you're not, you can take a bunch of small losses and it doesn't matter, right? That's why my reward to risk ratios on the winners and losers are what they are, which is, like on the order of what, over 2-3 to 1 most of the time, right? So, and sometimes a lot more than that. So that's, it's kind of how I do it. Everyone's different. You got to do what you feel comfortable doing, what could work for you, but this is the way I like to do it. So where's support? If there's any sort of pullback at this point, I'd put it probably about 70. Well, this high up here is 72.40. Okay, 72.40 into like 72.15. Okay, you know, this guy here. Okay, a little parallel resistance support, all that. That would be 72.15, and obviously you've got the you know, the yearly open up here, 72.82. We're like a few ticks from it right now, so you know, we could get up into that region, maybe a bit higher, get some sort of a consolidation or something before this bad boy goes back up to 74.50 or something, and that would be the next probably failure point, in my opinion. Or you know, where you could see a bigger failure would be up at 74.50. See horizontal stuff up there too. This gets better and better every time we look at 74.50 or 74.40 or whatever. You've got, what is that, 74.48? That's the July 21st high. My son's birthday. And yeah. So I'm down for this. Would be down for buying with 71.60 stops under today's low. This is a breakout. You have to be willing to change your opinion when the market says that you are completely and utterly and totally wrong. All right. Let's continue with this Aussie theme. How about a chart that, an idea that we had talked about earlier in the year, which obviously is doing quite well at this point, and that would be Aussie Kiwi. Hold on real quick. I'm gonna write down the supports for Aussie that I just talked about. 74.40, 72.15, 72.40, 71.60s. Stop. All right. Okay. So that was Aussie Kiwi. Aussie Kiwi, off to the races. Here it is. Do I have an annotated one? I guess not. I did somewhere. All right, so remember the Aussie Kiwi charts that we had talked about earlier in the year? Well, we've got now this bad boy, and guess that last Friday, this was Friday. I think I tweeted out a chart on Friday, actually, of that Aussie Kiwi chart, talking about having, you know, revisiting this chart, right? And Friday, the slam down again. I don't know what the hell that was. Why Friday? Why Aussie did what it did? Again, my guess, and that's all it is at this point, is that you had some month-end flows, and people, for whatever reason, were caught long Aussie dollar and had to sell it, or you know, what have you, because it really wasn't seen. I mean, it was a dollar move. People maybe were short dollars and had to buy dollars, but it was really, really, really exacerbated in Aussie and Kiwi to a lesser extent, but really in Aussie. And you can see that move right here, okay, with Aussie Kiwi getting absolutely smoked last Friday. But where did it stop? It stopped right at the lower parallel, right? And then that was, you know, here we are now, what, 300 points later in Aussie Kiwi on the upside, right at the highs, okay, at 109.70. So this is a bullish chart, if you will. The level that you just broke, being 108.70s, is actually now a level that would be or could be support if you indeed pulled back or consolidated or what have you, okay? And again, I bring your attention to the really, really, really big picture, which, you know, this could possibly be a big, fat, long-term, multi-year. This is January of 2014, so we're talking on the 2 years now, head and shoulders pattern, okay? And just to give you an idea of looking down looking way far out, the possibility that's here is a move up into close to 126. Okay, so you're talking almost 2,000 points. Of course, they are Kiwi pips, and if this cross is driven by more weakening in Kiwi rather than, say, more strength in Aussie, then it's going to be, the pips will be worth even less. So, be that as it may, it's a quite a bullish formation, a bullish possibility that you've got going on here. Okay. Anyway, so Aussie itself looking awfully constructive, as far as a move to the upside is concerned, or I should say continued move to the upside. All right, so let's move on then. So that was really the first topic I wanted to cover, was talking about, copper, China, Aussie, Kiwi, dollar. Let's look at dollar MEX, because this is one as well that is kind of, it's related, as far as the EM stuff is concerned. As far as the growth trade is concerned, the crude oil trade is concerned, okay? And this could be fun right now, because Mir asking, did I miss Aussie? You guys just saw the Aussie, right? Oh, Amir, Amir just got here. Sorry. Yeah, we just went through Aussie. I'll just pull up a chart and give you like a 10-second rundown though. So what I think is going down with Aussie right now is that you're going to get a move Amir. So here we have, you see this sliding parallel 50 line, right? I think Aussie's going to 74.50. This is the breakout. And the next area where it could kind of fail would be 74.50. Support now is basically 72.15 to 72.40. And stops would be under 71.60. Okay? So that's Aussie in a nutshell. All right, let's move on. Let's look at dollar peso, dollar Mexican peso. All right, so dollar Mexican peso, we have just broken through support really yesterday, and we're kind of following through on it today. What I would be looking at on a price basis for dollar mex would be a move back up into potentially the this one's kind of weird, because with the leap year now you have it's better when you have the month and week open start on the same day, like a new week, but such is not the case here. In any case, you can see obviously that this area that was just broken, okay, this right here is, this is former support. It was just broken. Okay, so any sort of pullback or bounce on dollar peso into the recent breakdown level here, the hiccups, any sort of pullback into the breakdown level, anything basically above 18 is a sell for dollar peso, with stops above 18, 31.50. And remember, you got huge spread here sometimes, so you'd have to kind of widen it out significantly. So, kind of difficult to put on, overnight trades sometimes with peso. And a lot of people don't like to do it because the margin's a bit high as well. But I just want to throw that out there. Seasonal charts, though, for Aussie. Really turn negative, particularly after this week. Okay, more so after, say, more so after this week than, say, after, before this week. But they are negative, and you can see here March So this is month by month seasonality. Okay, so January, February, March. March is historically the worst month of the year, okay, for dollar Mexican peso, meaning it's the strongest month of the year historically for the Mexican peso. All right, so if there's going to be a big dollar peso decline or retracement of all the jazz that happened in the last several the recent run up, obviously, in the exchange rate, then it's going to be there. Which brings me to the moving averages. This is the 20-week moving average. I'd say it's been pretty good support, wouldn't you? It's at 17, about 48 right now. It's pretty close to former highs. It's probably your first possible support, 1748. Okay, so 1748 support, 18 resistance. And that's that for now. So that's dollar peso. Okay, let's continue with our next theme, which is gold and yen. So gold, this thing has been a, I don't know, the best way to explain it. I mean, it's just been perfect. It's been ridiculous. So you've got this chart. We started following gold really after the ridiculous run up in the volume that we had going on. You did have, I commented that I think we can trade sideways for a while in gold because of the huge volume and the kind of the capitulation that we had. And that was on 211, right? Remember, that was the stock market low, blah, 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 blah. Well, we have gone sideways, and we have gone sideways in what's basically a textbook triangle right here in gold. Okay, so you can see A, B, C, D, E. Wrote in last night's update that, beforehand, we'd been looking at 1208, 1248 or so as support resistance within this thing. Those levels have been great. Within the decline, okay, from 1249.30, look, this could be wave E. The reason I have wave E over here is that a lot of times E waves are tricky. Okay, in other words, they have a tendency to be a little more prolonged, and they may themselves end up as triangles sometimes. In other words, you could get an A, B, C, D, E within the triangle, get really tight, and then burst out to the upside. So that's just something to respect. That doesn't change the fact that the trend in gold is up. Okay, it just points, to something to respect as a possibility that you continue in a tighter range. Okay, but that doesn't mean the trend's not up. The trend is up, and we've been steadfast, regarding that. So dollar yen. Here is that 4-hour reversal this morning. This is an hourly chart, but you can see the 4-hour reversal, and that puts you at 114.23 as potential resistance within the triangle. And again, that could be, it. Okay, so I would want to be putting orders up at 114.09 tonight. Okay, because again, that's daily reversal level. And if I could switch to a daily chart, I'd be very happy to show you what's up. Okay, so here we go. Did I put this chart in there last night? I don't know. I may have. Let's see. Swing update. Dollar yen, dollar yen, dollar yen, dollar yen. I had the hourly chart. Kind of same idea. Okay, so this thing popped off a little bit into 1455, but whatever. Okay, the bottom line here is that 1409 is, again, the daily reversal level right here, close 114.09. That is a level to watch, or I wouldn't watch, I would just put an order to sell there. You also have the week open at 1394, so you know what? It might be even better to put the entry for this thing closer to 1394 rather than 1409, given the reward to risk on the downside at this point. Okay, so a few things on this. One, you got resistance. It's beautiful. It's well defined. It's around 114. It's a range of 1394 to 114.09. Second thing, this range could continue. Okay, so I would be looking at, and by the way, if you're wondering how I got 114 or 112.16 the other day, this is it. It's just the daily reversal support. It's the close right here, okay, of the day that made the low for this move. And that ended up being support 1, 2, 3, 4 days later. This is a great little technique to use in ranges. Throw that out there, okay? What else we got? Okay, so yeah, what my point was, I wanted to say, if you start to move, lower, we get triggered on a short up at 1390, you're going to want to be taking some off around 16, 1250, because this still is a range, and you could continue to range, okay, until the breakdown takes place. And I think there will be a larger breakdown that does take place, okay, but again, these markets always seem, that's the story of markets. They have their own schedule. They do it on their own time, okay? Not on our time. Okay, what else? Aussie, still going, 72.80s. That's why we use stops. Gold and yen. What about euro yen and pound yen? These are interesting because I'm looking at at dollar yen coming lower into the range, say 112, 1640, maybe eventually a lot lower, but near term, just a range at this point, right? Euro yen and pound yen are interesting because euro yen made a J spike yesterday, okay, but do you know what the 50% retracement of the entire rally from the 2012 low is, all-time low, up to the high that we made in 2014 December? It's 121.94. It's literally just pips below the low that we made yesterday of 122.06. Okay, so you could get some sort of a basing process down here for euro yen to work higher. Okay, so that this is a downtrend. Okay, I get that, but I'm just telling you that you could certainly have some sort of a a sideways or bottoming process take place down here because it's a big spot. I don't have a setup here. I'm not trying to go long at a level that's and guess and call the end of the downtrend. Okay, but I would not be surprised if there were some sort of a bottoming pattern that did end up forming down here. Okay, with the J spike we had yesterday, I didn't write about it because I'd rather wait and see if you get follow through on this rather than say, just hope that the market would make a low. By the way, you can see here the week open on this is 124.42. We actually traded up into 24.35 last night and failed a little bit and pulled back. So that is interesting as well. And then, of course, pound yen. Wrote about this one. I think that we could head back to 162, which is the gap right here. Okay, and that could potentially be your next good resistance. Slope-wise, you do have resistance from basically what was former support from this parallel right here, okay? And that was support here, okay, on the 20th and the 21st. And then once you broke through it, it was also resistance here on the 17th and the 18th, okay? So, you can see that this line being quite precise as far as its support and resistance is concerned. And that would be a little higher, 163.50. Okay, so, we could certainly get a pullback here in line with the dollar yen pullback down to the range supports at 112, mid 112s, right? 112.42 is the biggest level because that's the huge volume level as well. And after that, you might get additional upside into this level before you get the real puke fest that comes back. That is yen stuff that I wanted to look at. Why don't we take a look at the DAX, the S&P, euro, and dollar yen, our funding currencies, kind of go on that theme a little bit here. Let's see, the DAX. Okay. This is a chart from the weekend that was published over the weekend here. And we already hit resistance. Look at that. This is resistance right now. We just hit it. Okay, so you can see we had we're looking lower in SPX, so that didn't work out too well. It says DAX resistance may not be until the 98.20s, and that actually seems to have worked out well. What's the high today? The high today is 98.37, and we're 130 points off that high. So that could be a decent top there. And remember, when you're going to get big selling pressure in DAX, that's when the only time you're going to see the euro rally at this point. Okay, being such a screwed up currency that the euro basically only rallies when it has to be bought for hedging, bought back. Okay, so that's what we have here with this pullback, and you can see the euro, I guess, has turned up a little bit off the lows. So I looked at the rates as I started the webinar. I think euro was a little lower. We've come off from 25. We've rallied 40 pips here off the lows. So okay, got to start somewhere. So yeah, that's basically the only reason to look for a euro rally would be DAX coming off resistance. Okay, S&Ps. Gone right through resistance here. This is the weekly chart. 1988.70 is horizontal level. That's the close of 824, the week of 824, the biggest volume, spot, biggest volume week that we had. Let's go to a volume chart, actually. You can see that. Okay, so here it is right here. Okay, so you can see that week, that volume right there, right? Most volume that we had basically since the week of that flash crash. Or sorry, not flash crash, the bear market in 2011. And the week of that low was actually huge too. Ended up being support. So yeah, what you're looking for then is the close of this bar to provide resistance. Okay, so that's the weekly chart, and 1972.75, we're actually slightly above it. Oh, because this is futures, and you do get the difference between, when the contracts roll over, things get a little different. So on spot, which is what the CFD is, which is basically the index, it's actually a little higher. It's 1988.70, so it's like an 11 points. All right. But other than that, I'm not too concerned about messing with the S&P. It's a big, I don't know, widowmaker show, whatever you want to call it. I'm not trying to trade that right now. We have good breakouts in Aussie and other stuff going on here. Okay, so that's that. We looked at dollar yen, we looked at euro, S&P, DAX, dollar CAD, and crude. Obviously, crude oil acting pretty good today, considering. So you had the inventory build that came out, and this is what happened on it. It was the biggest inventory build in years, and crude took a dump like 2.5%. It then turned around and rallied like crazy okay, and pulled back, and here we are. So the fact that crude continues to act extremely well in the face of what supposedly is really bad fundamental data does tell you that the market, is no longer bearish, in my opinion, and weakness should be bought. Not sure if you continue to stay within this super steep slope. Usually you don't stay in that long. These types of slopes, it's just too steep, but the market continues to adhere. But if you get below there, then support comes back in here. This blue line, which we've had for a while, right, crosses through a whole bunch of support, resistance, former lows back here, lows throughout February. Okay, low here on 229, the last day of February. That was on Monday. And then you've got resistance up here at the red lines, which is higher. Okay. So, as this pertains obviously to dollar CAD, I put out that chart this morning on Twitter, talked about, I think we could get an ABC. So A, B, little B wave, and one more poke higher. We might not get all the way up to 36.30. We might just end up getting up into 35, 50 or so, 35.45. And that would be okay with me. I actually think that you've got what is up there? You've also got up there, you've got the 35.20 is the week open, 35.43 is the open from, I guess that was Sunday. Yes, it was. Okay. Not Sunday, sorry. Into it's the open on Monday, so the actual month. Okay, 35.43. All right. Okay, so for me, that pretty much does it. I mean, there's breakouts that are underway in Aussie and China in copper. Aussie's on its way towards 74.50 before you get a substantial, or before you have the possibility of a substantial pullback attempt. Support for Aussie is going to be 72.20 to 72.40 at this point. Probably the higher we go here on an intraday basis is, why not just run all those stops? People are short, I'm sure, and they're about to wish they weren't as the market continues to go higher. But yeah, 72.40 is probably where I'd be looking to get in at this point. Former resistance on a horizontal basis. Here we are actually now slightly positive on the year in Aussie dollar, 72.82. Here we are in March, up 7 pips on Aussie dollar, and could end up going to 74.50 before we pull back. All right, so that's the story right now. Are there any questions or any other markets that you guys would like to go through? I'd be happy to look at whatever it is that you wish to view at this point. Chris asking about dollar NOK. Sure, let's take a look. I have not really taken a look at this lately, but let's take a peek. Absolutely, dollar NOK. Ugh, that is one ugly, ugly, ugly looking price action right there. Well, you have this wedge completed here, but since then you've just got a drift, a complete drift. When you look at it I just see a glance. I see a 5-wave move to the downside and a choppy, disastrous move to the upside, which is probably going to be a correction and will probably end up giving way to the next leg lower. You've come into the fib area. This would be the former 4th wave right here. That high on the 2nd is 874.44. You obviously went into that level already. 61.8 retracements, 878.28. So, plenty of potential there. But you know what? I'm fine. The reason I haven't talked about this is because I'd much rather trade dollar CAD at this point than dollar NOK. And here's one reason why. So if I pull up a chart of CAD NOK, do you know what we've got here? We've got basically multi-year breakout on the upside with a giant coil, right? Looking very triangular-like. And the momentum is, this is a weekly chart, by the way. The momentum is obviously on the near term strong to the upside on dollar NOK. So, A, B, C, D might get a little pullback in wave E, and then this thing could really explode higher. Obviously, with the volatility in both pairs right now, this is much more influenced by by CAD than NOK. Amir asking, what's the potential upcoming move, short time frame for Aussie? Well, I'm not sure. What do you mean by shorter time frame? Like, it's still going here. I mean, we're at 72.90s. So, like, by shorter time frame, for me, I mean, it's pretty simple. It's like 72.40s at this point is going to be the area for support. Okay. And then, that goes up to 74.50. So, I mean, I guess you could say that I'd be looking for a pullback, from here into 72.40 over the next day or two. Oh, 30 minutes to an hour? Yeah, I have no idea. I mean, that's really, I can't tell you what's going to happen in the next 30 minutes to an hour. I have no clue. I don't do that that's really short term. 30 minutes to an hour. I mean, here's a 5-minute chart. Okay. You can see here. So if we look at, check this out, Amir. All right. So, I'll make a stab at going really short term for you. Okay. If we look at this as an impulsive 1, impulsive 2, obviously we were short. I was looking at this as ABC, just to show you that there are always multiple interpretations. Here we have multiple interpretations, okay? And you got to go with what the market's going to try to do. So we're trying to get on board a bigger move on the upside at this point. No problem doing that. Don't really care about, whatever the deal was with what happened before. You got to move forward. So first of all, there's a high volume level, 72.59. That could end up being support at this point too. All right. What I want to do though is basically identify the trend, which I think is higher now because we've broken out, and I've just showed you a bunch of charts saying that we've broken out, saying that the next big level on the upside is 74.50. Okay, I want to know where my risk point is. My risk point is going to be today's low. Today's low is the breakout day low, and it's before the news that came out last night, obviously, which is 71.63. So stops below there. Great. Okay, so what I want to know next is where would be the ideal level to buy. I'm going to go 15-minute chart. I'm going to look at levels that I think, end up basically defining former support and former resistance. And basically, the best spot to do so looks to be the 72.40 region, maybe a little higher than that, like 72.45 or so. Okay. You can see all the moves into this level is clearly former resistance, so now it's good for support. Okay, that's what, that's trading 101. So pull back into there, look to get long, stops down here, and you're talking about basically an 80-point stop at that point, with your upside being 200. Okay, so not quite 3-to-1, but it's a good reward to risk. Okay, so you've identified trend, identified breakout, meaning you could get a bigger move. You've identified the best place to potentially buy this thing, and you've identified where you would be wrong and lose money. But that's okay, because if you know those two things, where you want to buy it and where you would be wrong, then you can put your stop in and put however much you feel like risking on that trade, and calculate what you'd be willing to lose. Okay. So that is that. Obviously, what I think is actually going to end up happening is we get to 74.50, and I feel like we fail up at that region and pull back as part of a larger bottoming process. But that's just kind of my feelings on the situation. Oh yeah, your break even was 72.40s. Whether you stop on those levels or wait for pullback 72.40s. Well, I'm just saying, like, I would look to buy into 72.40s. You know what I'm saying? If we came into that region. So that's kind of what I'm looking at right now. But I do think we get up to 74.50. That's all. All right. So that's the 15-minute chart. Asking Beer Matthew, asking Euro and Kiwi about longer term pictures. So, where are we? Kiwi actually, Kiwi is obviously still it's not doing, it's not like doing anything like Aussie's doing, but you could still trade lower, in my opinion, in Kiwi before you go a lot higher. But the kind of divergence between the two, obviously, Aussie Kiwi was the trade. And as far as the long-term picture is concerned on Euro Kiwi and, say, Pound Kiwi, let's Pound Yen. Pound Kiwi. This, to me, gives you the potential for higher as far as longer-term trend, the trend that we'd care about is concerned. Again, if you could have a whole lot of BS take place over the next number of weeks or longer, but eventually this is going to be a spot to look at as far as support, 209.20s. And if you get up out of here, again, you've got a lot of resistance up here. You've got the channel, or what is the upper wedge boundary. You've got the year open, former lows, et cetera, et cetera. But if you get up through this level, then you have a broken wedge, and then that's when this gets really bullish for, potential move all the way back up to the highs. Okay. So Kiwi might just be in a world of pain, judging on the possible Aussie Kiwi pattern that we've got in the in the Pound Kiwi. Euro Kiwi, not nearly as clean on this one or as clear on this one, in my opinion. Probably also has to do with the fact that Euro Pound doesn't look that great right now. It's rolling over. But you are at support, okay, on Euro Kiwi. And by that, I mean, you can see this is the December 3rd ECB day, okay, and you can see that we've come into it twice now, just this week, just over the last couple trading days. This is Friday, and this is today. So this is support. I see no trade here, however. Okay, all right. Any more questions? Asher asking about wave count question in dollar yen. So asking about, okay. Well, at this point, we have 3 moves within the triangle. So we have A, B, and if this is even still a triangle, okay. And then we'd be looking for potentially wave A, B, C, D. And 618 of B puts you at 112.19, which is totally sweet because 112.16 is level for support anyway. So, wave D. So to answer your question, I have a question about would your wave E at 1409 be the completion? Wave E at 114.09. So I basically don't have, we still have some more triangle to go in this, is what I'm seeing, Asher. So we don't have a E wave yet. We have A, B, C, probably lower in D now, which means we can put orders to sell at 113.90s up to 114.09 with stops above today's high in order to take you down to basically 112.20. Okay, and then you would expect basically a bounce in wave E, which probably would end somewhere, if we're correct in this interpretation, what you would have would probably be something around maybe all the way back up above 114 potentially. Okay. Yeah, so this is what the pattern looks like for me, or what I see in the pattern. Okay, A, B, C, D. So lower over the next day or two into 112.20, and then you get a bounce into 114s again, and then potentially you get the next big puke fest on the downside. So we're getting there as far as resolving. And by the way, the seasonal implications are actually pretty interesting on dollar yen. Okay, so this is seasonal. Obviously, the seasonals will sometimes work and sometimes won't work. It's just part of it. But you do have actually the tendency for tops, and this goes across every single look back period. So 5, 10, 15, 20, 30, all these years. Okay, and you've got up here, basically after this week, you do have the tendency for whatever reason for next week to be actually weak, and then you go higher into the rest of March, okay, into very early April, which, as we know, is the end of the fiscal year in Japan. So fundamentals, what have you, but all this stuff is reflected in the seasonal chart. The fundamentals are reflected in the seasonal chart. Okay, that's what I'm trying to get at. And that's when I think you could end up getting, the potential for the big next leg lower in dollar yen, and the big next leg higher in euro dollar, and the big next leg lower in the stock market, and the big next leg higher in gold. And yeah, so pretty exciting. All right. Okay. All right. So we will end it there. Been going for about an hour here, so I want to get this. I want to get this archived, get this up. Again, we're looking to buy Aussie now, probably near 72.40s or somewhere in the 72.40s. There is a high volume level at 72.59, and we'd be looking to sell. Sell dollar yen up near 113.94, 114.09. You take it down to 113 or 112.20 for for this is dollar yen chart for wave D of the triangle. By the way, this is support right here. You're at support right now, okay, in dollar yen on a very short term basis. Okay, 113.36 specifically is your level, and that's where we're at. Euro could be trying to bottom. Things like a sinking ship, just gets worse and worse. But pound dollar going to 42.50 in my opinion. Support now on this median line right here. Okay, so that would be about 140.15, 140.20. Okay. All right, so I'm going to wrap it up there. Thank you so much, everyone, for attending. And looks like we are actually starting to get some interesting, sensible, good, tradable, solid price action as we have finally, finished up 2 months of the year and what's been kind of an odd year. But the good stuff is yet to come. All right. Okay, so take care, everyone. Have a great rest of your week. Talk to you later. Bye.